Welcome to the UFCW 832 SOFA series. I'm Erin Selby, the Director for Education and Training for UFCW Local 832. And we always like to start off with a land acknowledgement. As long as the sun shines, the grass grows, and the river flows, UFCW Local 832 acknowledges that we are gathered and work each day on ancestral lands, the traditional territory of the Anishinaabe, Cree, Oji-Cree, Dakota, and Dene people, and on the homeland of the Métis Nation. Our offices are located on Treaty 1 and 2 territory, and our work extends into 3, 4, and 5. We recognize the injustices done to the Indigenous people of this land and are committed to supporting and collaborating with Indigenous communities in the spirit of truth and reconciliation. So today we are going to be talking about everyone's favorite topic, taxes. I'm sure that all of you are excited because we're heading into tax season. And well, here's the thing, you can always count on 2 things, taxes and, oh no, that's a depressing saying. I'm not going to finish that saying. You can count on taxes, but it is a little complicated, which is why we're bringing in our expert here. I'm joined today by Geoge Combiadakis. I said it wrong. Combiadakis.
Combiadakis.
George is an accountant. Yes. And, and he's going to answer a few of your tax questions. Thanks for being here with us, George. I really appreciate having you here with us.
Thank you. Nice to join you.
We will get started because although it may not be everybody's favorite topic, it is something we have to face at this time of year. So let's get started with some of the really basic questions, like who do we pay taxes to and why?
In Canada, you're paying taxes to both the federal and the provincial governments. Taxes are collected through the CRA, which is our Canada Revenue Agency, and then they take that money from us and they provide us with all kinds of services and programs. CRA collects our tax dollars and then they return them back to us in the form of education, free healthcare, roads and highways, and numerous other benefits.
There's a good reason for paying taxes, even though it seems a little frustrating at this time of year. So what income do people have to report?
Well, as a Canadian, you're required to claim all your worldly income. So you're required to report all your information slips, and that's like your T4 slips from your employer, your T4A slips from your pensions and other incomes, T4E slips, which is your employment insurance benefits, old age security, CPP, CPP disability, your T4 RIFs, your RSPs, T3s and T5s, which is your investment income, T5007s, which is your social assistance and workers' compensation, any rental income, and then you can claim your related rental expenses against that, your COVID-19 benefits, which they usually send you a T4E or a T4A slip, and any spousal support that you receive.
Well, now that you've listed all of that, we can see why we need the help of an accountant sometimes. So what about for people who do odd jobs on their own? You know, a little bit of handy person work now and again, shoveling driveways that they get paid for. Do they have to claim that income?
Yeah, definitely do. With self-employed income, you would show that as a self-employed income, but then you're allowed to claim your expenses, related expenses to that. So you can deduct like your car, your cell phone, any supplies or materials you buy, any office if you have an office at home, you can claim your office at home expenses.
Okay. What about for people? I know a lot of our members get tips on the job. Do you have to claim your tips?
As I said earlier, you have to claim your worldly income. So tips would be claimed as other employment income, not reported on T4 slip. And Revenue Canada wants you to pay taxes on everything you receive.
Perfect. So there are things that you talked about that you can claim as expenses when you have your own business, but what about for people who are employees? What can they claim as an expense?
Well, as an employee, you're very limited as to what you can deduct. So your deductions would include your registered pension plan contributions. That's what the employer takes off of your T4 slip. Your RSP contributions. Sometimes you could buy them through an employer's plan, or you contribute yourself. Your union dues. If you're a long distance truck driver, you can claim board and lodging. And now you're able to claim up to $23 per meal now, which has gone up quite a bit. That's $69 a day you can claim. And then you could also claim your hotel fees if you have to stop in hotels along the way. Tradespeople can claim their tool expenses up to a maximum of $500. If you work in a designated northern community, you can claim your Northern Residency deduction. And that amount depends on where you live up north. Like if you're in a central zone, let's say Thompson, you're allowed $5.50 a day that you can claim. And if you're in a remote northern zone, you're allowed up to $11 per day.
Well, we all know that it's expensive to have kids. Is there some expenses that you can claim for your children?
Childcare expenses can be claimed for dependent kids under the age of 16. The maximum amount claimed depends on how old the child is and whether they have a disability or not. You can also claim overnight camps for kids, and that's at $125 per week, or up to $200 per week for kids under the age of 7. In Manitoba, you can also claim the fitness tax credit, which is a $500 credit for the kids. They have to be registered in a registered sports program, or up to $500 for an arts program, such as dance or music. In the case of adoption expenses, you can claim up to a maximum of $16,729.
Ah,
And that would be like your legal fees for adoption, your transportation, like if you have to go overseas to pick them up or whatever, you can claim all those expenses.
okay.
And childcare expenses have to be claimed by the lower income spouse.
Okay, so whoever's making the least amount of money, that's the person who's going to claim the
Correct.
childcare expenses. Okay.
Correct. And there's a few exceptions to that. And that would be like if one of the parents is a full-time student at a post-secondary school, or if one of the parents is sick for a certain amount of time, that the higher income would claim it. Or if one of the parents is incarcerated, then the other parent would claim it.
Okay. What about if somebody moves? I've heard that there are things that you can claim for moving expenses.
Definitely. For moving, you have to move 40 kilometers closer to your workplace. So if your move qualifies, then you could claim your moving costs, such as a transport company that you hire. Oh, by the way, recently I had somebody move from Victoria to Ontario. It cost them $48,000 for the moving truck. That's a lot of money.
Not expensive, or did they have a lot of stuff? Which is it?
Well, it's a big household that they moved, yeah.
Right.
So you can, and then also your travel expenses from your old place to the new place. So if you drive, you can claim your fuel, your gas, your meals and your hotel costs, any temporary lodging expenses, cost of selling your old home. So you can claim your real estate fees, which is a big deduction, and your legal fees.
And that's only, you said, if you move more than 40 kilometers to get to go to your job. So it's not like, oh, I'm getting married and my partner lives in BC, so now I'm moving to live with my spouse. That wouldn't count?
No, you have to be moving closer to work.
Closer to work. So if you're not moving for work, it doesn't count. If you're just,
It doesn't count, no.
you're just moving for
If you're
another
just
reason.
moving, then yeah, it doesn't count.
Okay. But if you, for instance, are working in Winnipeg and you get a job at the Maple Leaf plant in Brandon, that's the kind of thing you could use
Correct.
for a car.
Yeah.
Okay.
Correct.
So what about people who use their car at work? Are they able to claim something with that?
In order to claim your car at work, you require a T2200 from your employer. It's called the Declaration of Employment Conditions. Once you have that form, then you can claim your car expenses, such as your gas, your repairs, lease payments, car wash, insurance, and license. And if you own the car, you can claim the interest on the car and your depreciation, or you can claim your lease payments if you're leasing the car. And that amount has to be prorated as to how many miles you use for work versus your total kilometers that you put on it.
Okay.
And you should keep a log on that, because Revenue Canada likes to audit those.
That's something they're going to check.
They're
So
gonna
make
check.
sure you're tracking that.
Definitely.
Good one. What about for people who use their phone at work? Can they claim that?
Again, it would be like the card, it would be a requirement of work. So the employer would have to stipulate that you have to use your phone for work. And if they don't give you an allowance for it, then you could claim it a percentage of the phone expenses.
But if they
And
pay for your phone, then you can't claim it then if they pay for it.
No, you can't. And if you use, let's say you work at home and you're making long distance calls from your home, then you can claim those long distance expenses also.
Okay, because a lot of people are working from home right now.
And it does add up. Yeah.
That does add up for sure. You know, a lot of our healthcare is covered, but there are some things that aren't covered by healthcare. What expenses can you claim that are related to health things?
Well, you can claim eligible out-of-pocket expenses that aren't covered by your health plan. These include like payments to a doctor, a dentist, a registered medical professional. And you can also claim your premiums that you pay for your healthcare plan. And other medical expenses like artificial, if you have to buy artificial limbs, wheelchairs, crutches, hearing aids, glasses, contacts, dentures, dentures are a big one, and your prescriptions. Now, medical expenses, they have to be over 3% of your net income to a maximum of 2,421. And whatever you have over that amount, then you would get a credit for it at your tax rate.
It's not everything. It's not everything.
It's not everything that you claim, though.
So it's, yeah, there's probably not tons of people who get that credit because it's pretty high.
We get, especially like a lot of older people where they have like dental and dentures and hearing aids. Those are the big ones that usually make a big difference on there.
Yeah, wheelchairs, that sort of thing probably adds up.
Correct.
So we talked earlier about kids, and there's some things that you can claim because they're your dependents. But what about your spouse? If your spouse stays at home and you work, is your spouse a dependent?
Yeah, your spouse's income would have to be under $13,808 in order to claim them as dependent. So your claim for them would be $13,808 less whatever they earned.
Okay,
Yeah,
so
and
if
also
they have
if
a part-time job, it might count if they're not making very much, or if they're not working at all.
Correct, yeah. And also, if your spouse has a disability, like a lot of times you have a spouse that stays home, but she stays home because of a disability. Now you can transfer that disability over to yourself and claim it on your taxes.
Okay, so that would work too. What about if you're caring for elderly parents? Are they considered dependents?
Yes, if your elderly parents live with you and their income is under $24,604, you can claim a caregiver amount for them. And again, for your elderly parents, if they have a disability, you can transfer that disability over.
Same thing. So if you're taking care of them because they have a disability, then you can claim that as well.
Yes, definitely.
So, you know, you hear at this time of year, you probably get tons of advertisements if you're on any kind of social media about this is the time to buy Rsp, registered retirement savings plans, donations to charities, that sort of thing. What should you be doing and how much is it going to benefit you?
Well, let's start with donations first. Now, CRA allows you to claim up to 75% of your net income as donations. The excess amount will be carried forward for up to 5 years. So on the first $200 of donations, in Manitoba, you get back 26%. And any amount you have over the $200, you get back 46% on your income tax, which is a sizable amount. Now for RSPs, there are limits for RSPs. So you're restricted to 18% of your earned income, less the pension adjustment figure, which is what your pension contributions are and what your employer's pension contributions are. And then the amount that you don't use in 1 year, you can carry forward to the next year. So the easiest way to figure out how much RSPs you can buy is to just look at your notice of assessment from the previous year, and Revenue Canada gives you the exact figure on there.
It'll show you how much you could spend on RSP.
How much RSP is the maximum RSPs that you can buy.
Well, maybe if somebody came into money through an inheritance or something, they could maybe max that out.
Well, you have to be careful. You have to be careful in maxing it out, because I've had people in the past where they earn $25,000 a year and they go buy $30,000 of RSPs. Well, that doesn't help because they can't use the RSP deduction.
Oh, okay.
Yeah.
So it's not an automatic thing.
No, it doesn't necessarily work that way. So it's good to, I always tell people, like, feel free to call me and I'll give you the advice and I'll be able to review it with you, because it's a lot easier rather than make the mistake, buy too much RSPs and then try and take the money out of the RSP without penalties in there.
Somebody can call and do that. I know that the RSPs in general are kind of complicated. Maybe you could tell us a little bit more about how that works.
Sure. Like with the RSP, you get a deduction at whatever tax bracket you're at. So if you're earning so much, you get the RSPs come right off the top. And then when you cash in your RSPs, you would pay tax at the current rate. So ideally, you're buying the RSPs when you're in a high tax bracket, and then you're cashing them in when you're in a lower tax brackets.
When you're retired and you're making
when
less
you're
money.
retired. Correct.
Okay.
Yeah, so I've had people where they go buy RSPs 1 year and then the next year they need the money, so they cash it out, and then they end up paying more taxes on it because it pushes them into a higher tax bracket. So another option I'll give people is that buy it as a spousal RSP. So if you're in a higher tax bracket and your wife, let's say, is not working, Then you could buy a spousal RSP, and then after 3 years, she would be the one cashing it at a lower tax rate.
Okay, so that makes it a little bit easier for you to buy and spend that money, I suppose.
Correct. So
Okay.
ultimately, it's your choice now. If you donate, you get your tax credit on it, but then the money is used to help other people. If you buy RSPs, you're going to get your tax break now. You pay tax on it later, but the money remains yours for your retirement. And another option I'll give people is that if they're in a low tax bracket, so it doesn't make sense to buy the RSPs, because what they save in the low tax bracket, they're going to end up paying it back when they cash the RSPs in. And then often, if they're in a low tax bracket, when they retire, they qualify for an old age supplement. So now if you have RSPs and you cash in your RSPs, it's pushing you into a higher tax bracket and you don't qualify for your supplement. So if you put the money into a tax-free savings account instead, then you can take that money out of the tax-free savings and it doesn't affect your income.
So it won't affect some of the other money that you will get at your retirement as well then?
Correct. So then you may qualify for your supplements.
So we know with the pandemic, there has been, some people have received money when they've been laid off, but there's also maybe some new tax benefits to help people who've been affected through COVID. Is that right?
Yeah, they brought in some COVID-19 temporary measures. And for example, EI, now they have a reduced work week requirement for EI. So instead of having to work so many weeks, that amount has been reduced. There's a Canadian worker lockdown benefit, where it's $300 per week if you're if there's a lockdown going on, and that's good till May the 7th of 2022. There's a Canada Recovery Sickness Benefit, which is $500 per week for up to 6 weeks if you're unable to work due to COVID-19. There's a Canada Recovery Caregiver Benefit, which is $500 per week for up to 44 weeks per household if you're unable to work because you have a child under 12 that's sick, a member of the family is sick, and there's the schools the schools are closed, or daycares and care facilities are closed. So that's another benefit they brought in, and that's good till May the 7th. Manitoba also provides a benefit up to 5 days to employers, so that employees who are off isolating, their paycheck continues, they keep getting their paycheck, and then the employer would get reimbursed through the government. Another benefit is the working from home benefit. It's gone up to $500 this year. It's still calculated at $2 per day, up to a maximum of $500. But there's a catch to this, because if you're claiming employment expenses, so if you claim your car as an expense, then you have to claim the detailed version of the office and the home. So you would have to take a portion of your utilities, rent, internet, and utilities, and you have to prorate it according to the size of your office at home.
Right. So if your office is a little corner of the table in the kitchen, you kind of have to calculate that.
You're not going to get much of a deduction. Yeah.
You're not going to get much because it's just a little corner in the table. In the kitchen.
I've had people last year where they do the detailed calculation, and it takes some hours to do that detailed calculation. And then they come in and we figure out the $2 per day is actually more than their calculation worked out to be.
Wow. Well, that's why, again, you ask an accountant for some of that advice. What about changes this year? Is there new ways to save money for people?
Other than the COVID-related benefits, there's a disability support deduction. So people with disabilities, now if they need any special support to perform their job or to go to school, they need any special equipment, they're allowed to claim that as a deduction. And also the basic personal amount has gone up this year. So it's up to $13,808 federally and $9,936 provincially. And
for people who don't understand that, that means that's how you can earn up to that much and you won't be taxed on it. Is that correct?
Correct. Yeah. Yeah. So
as long as you're earning less than about 13,000 for the federal government and about just under 10,000,
10,000,
you won't be taxed on that.
Correct. Yeah.
Okay.
Yeah.
And
and there's also
carbon tax credit work.
Pardon me?
How does the carbon tax credit work?
The carbon tax credit is a lump sum that they pay out to you. So with the carbon tax credit this year, it used to be a lump sum last year, and then this year they're giving it to you as quarterly payments, like the GST payments. So every 3 months you'll get a carbon tax credit.
Okay. So as we covered like a whole bunch of things already, but are there some that are commonly overlooked that people quite often forget about when they're getting their taxes done?
Well, one of the big ones that people forget, like I'm surprised that people still don't know about it, is the pension splitting. That's where the higher income spouse who receives a work pension can split that amount with the lower income spouse, and they save a whole pile of taxes. Like I've seen people save as much as $5,000-6,000 on their tax bill. And every year I still get somebody that comes in that I've never heard of that. Also, spousal support payments are another one that I've seen forgotten on a lot of times. Usually the person that has to pay the support payments is always, quick to point out they want to make sure they get their deduction, but then the recipient often forgets about that one. Another deduction is if you have to pay legal fees to collect support payments. A lot of people don't realize that that's a deduction for them.
Okay.
Yeah. And then we have carrying charges. Like a lot of people, if you have investment income, the banks and investment companies, they charge you a fee to invest for you, and you're allowed to deduct that fee. So a lot of people don't realize, and that fee can be, as I've seen, $3,000, $4,000, $5,000 as fees for their investments.
A lot of people have gotten COVID-19 payments. More people have gotten EIA. That's probably something they've got to keep in mind as well.
Well, yeah, people don't realize because they might have received the EI or COVID payment throughout the year, and then they forget about it because it's something that happened and seemed to have happened so long ago. So that's another thing. Now, Revenue Canada is always quick to pick those up because that's automatically on their computer. So right away they'll reassess it and send you a refund. And that's usually when we'll get calls to see that we screwed up on people's income taxes and they didn't get as much as they're supposed to get.
Oh, because they've forgotten that they have to claim those.
Yeah.
It's amazing. The government never forgets about those ones, do they?
No, they've got it all in front of them.
So we will talk about how people can get an appointment with you in just a minute, but when they're preparing to come in, what are some of the biggest mistakes people make when they're coming for their appointment with the tax accountant? Well,
the biggest mistake is people are not prepared when they come in. So many people are missing information slips, like there's T3s, T4s, T5s, and they don't realize how much slips they're getting, or they'll forget about some. So we have people that'll make an appointment, come in, sit down, and they won't have a single piece of paper with them to start.
Oh, no.
Yeah, some are really bad.
Well, that's waste their time. It wastes your time.
Totally waste of time, yeah. And then there's even people that come in their first time coming in to get their taxes done, and then you start asking, well, what's your wife's birthday? They don't know. What's your kid's birthday? They don't know. So they have to phone home and get these birth dates, and it's just a total waste of our time when they come in like that.
Yeah, there's a lot of things you need to bring, isn't it? So,
correct. Yeah.
And then they end up having to come back anyway. So we will put up a list of things, a checklist of what people should bring, but what are some of the common things that you need to remember to bring to your accountant?
Well, as discussed earlier, you need to bring in all your information slips. So your T3s, T4s, T5s, your work pensions, CPP, old age security. The simplest way is to go back to your last year's income tax return and look at the papers attached to the back and make sure you have those papers there. Another way, you can also set up an account with CRA, and then you could go in onto their file and see what they have for you. But with that, what happens is there's some slips, like the T3 slip, for example. It's an investment income, and it's not they don't have to put them out till the middle of March. So Revenue Canada won't have that on their site probably till April sometime. So you don't always have all your information slips. So CRA does a review in the fall time, and then they'll pick up whatever slips you don't claim. They'll pick it up through their system. And then they're quick to charge you penalties, of course, and interest on that late money. And if you get stuff like a T3, I've seen some T3 slips from CIBC where people may have $5,000 or $6,000 of investment income, but they have a carrying charge for $4,000. So CRA will put in the investment income because it's in a numbered box, but they don't pick up the carrying charges. So basically, you end up paying a lot more taxes than than you can pay. Yeah. Now, if you pay rent, you need your rent receipts. If you have childcare, you need all your childcare receipts. And it's best to summarize all that. Like if you bring me a whole pile of receipts and I have to go through them, it just takes a lot of time.
You don't want someone to bring a shoebox with just
No,
crumpled up
definitely not.
in there. That's not helpful.
Yeah.
So
Okay.
you need the receipts, the actual receipts, but you'd like to have it sort of summarized of these are the car ones, these are the childcare, that sort of thing.
Yeah, that way it just simplifies. That way I can review the receipts if I have to, but I have a total figure, so I don't have to start crumbling through receipts, looking for numbers and
So
digging
if
it
somebody
out.
could just actually add that stuff up ahead of time. So
Correct.
here's all of my childcare ones, they total this amount, put a paper clip on them.
Yeah.
You're good to go.
I've had people come in where they'd like to make $5 donations to 10 different organizations every week. And they come in with a big stack of receipts for me, and they can just, total them up, and I'll take their word for it.
And if you just add it up, it's ahead of time, it's going to be a little bit easier. So summarize wherever you can. What about getting your taxes done? Like, should you be coming in at the same time as your spouse, or can you go in separately? How does that work?
Well, ideally, like if you have your, let's say you have your kids in university, ideally it's good to bring the kids' tax returns with you, because what we do is we transfer the maximum, like we maximize the child's return first, and then whatever is left over, we get to transfer to the parents. So this way they can take advantage of the tuition receipts. If you have a spouse, it's best if you and your spouse can come in together, because this way we can optimize the tax return, because some credits go to one spouse and some go to the other. And if you don't have your spouses, if you can't do them both together, then at least bring your spouse's net income in. Yeah, so we don't claim credits that should go on your spouse that we put on.
And as you said earlier, there's some things that, you might want to put it with this person or put it with the other person. So if you're together, it just makes it a bit clearer.
Correct.
So you do have a checklist, though. If people want to ahead of time figure that out, there is a checklist available. How can they get that?
Yes, we do. We have a checklist at the office, and perhaps we could put that checklist on the website if it's possible. And if you phone our receptionist, she'll gladly go over see what information you need to bring in with you. Another way, again, to do it is to go to your last year's income tax return and see what you have on the back, and make sure you at least have all those slips with you.
I don't know if it's too late for this now, but maybe it's too late for your 2021 taxes. But what could somebody do in 2022 to save more money next year?
Well, first of all, like if you review your tax return and see where you can save, then you can start buying your RSPs early. So that way you're not scrambling at the end of the year to get your RSPs. For your medical receipts, like organize them in a file. So whenever you get a receipt, just put it in the file so you have them all at the end of the year. I get people, they're scrambling all over trying to get this and trying to get that. And it's just a lot easier if you could keep them all in one file. You could save if you bring in your last couple of pay stubs with you, then we can make sure that we're claiming your premiums to your healthcare plan, because that's a big deduction and a lot of people miss that. And then you could keep track of your days that you're working at home if you're claiming the home expenses, and keep a log of your car expenses. That's the big one, because people wait till the end of the year and then they do it. And
they're looking in their calendar. Where did I drive? What did I do?
Yeah.
Yeah, that's a problem. So we are going to let people know how they can book an appointment with you, George, but what is the benefit of booking an appointment with your office rather than just filing online with one of those services like TurboTax or something like that?
Well, at the office, we prepare taxes for a living, and we see a variety of situations every day. And a basic tax return can be done in about 15 minutes and you're on your way home. We're familiar with most deductions and often have suggestions where you can save some money on your tax return. If you're computer savvy and financially literate person, there's nothing wrong with doing your own taxes. But I'll often get people where they do it on their own, and then the next year they're back again because they got so frustrated with the program and they screwed everything up, and Revenue Canada fixed it all up and reassessed them and all kinds of problems. I've had people where they decide to do their own tax return, and then they'll come and pay me to go over it again, make sure I've done it properly. One year I had a couple that came in where they came in and they're all proud and we did our own taxes, and they were both getting big refunds. So I started going over their tax return, and it turned out that they were both claiming each other as dependent.
Oh, you
So they
probably
were
can't
each
both
getting-
be dependents.
No, so they were each getting about $1,200 more than they should have. So now if you send your return like that to Revenue Canada, they may process it because sometimes it just goes through the computer and gets processed. But then the fall time when they do their audits, they'll end up sending you a bill. So if you spent all
You
that
may
money
not notice
already,
it right away, but a bill eventually comes. So
the bill will come, yeah.
The
So if
bill
you
will
already
come.
spend that money, you're gonna have that bill to pay down the road.
Sir, you've given us a lot of tips on how to save money, but can you give us like financial advice? Is that something an accountant can do?
Well, an accountant is not necessarily a financial planner, but if you have any questions when you come in, I'm glad to give you my opinion. During tax season, we're very busy preparing tax returns and time is very tight. So as a result, I just try and keep everything to a basic tax financial advice, such as RSPs, tax-free savings accounts, pension splitting, and that sort of thing.
Probably should see a financial advisor, maybe through your bank or credit union if you have more questions.
Yeah, and usually a financial advisor, like they'll go into detailed financial plans for you, and then of course they'll charge you accordingly.
Yeah. Unless it's your bank or credit union, because they won't charge you, but then they expect you to.
But then
buy some
they
investment.
sell you the services where they're making a lot of money.
Exactly. So you said earlier it's going to take about 15 minutes for people to get their taxes done?
Yeah, the average union member takes about 15 minutes to prepare and file their tax returns. The person normally comes in for their appointment. We prepare the return, we go over it with them. And then once we e-file it, we give them all the original documents back, and they also get a copy of their tax returns.
How soon do they get their money? Because that's what
Well,
everybody's waiting for.
Yeah, it normally takes like 8 to 10 days or sooner. Like I've had people where if everything clicks, they'll get their refund in like 2 or 3 days, which is
Don't
really
count on that,
surprising
no.
sometimes.
Maybe don't count on 2 or 3 days.
But you don't count, like we always tell them 8 to 10 days because that's the norm. Now, if there's information missing on your tax return when we file it, then that would trigger, like it would delay the return for you. One of the common things that we find is the disability tax credit. Like people either have to renew their disability tax credit or there's no form on file. So that's what delays it, because then the Revenue Canada will get a hold of you and ask you to fill in a new form before they can process your return.
They don't like to send checks anymore. They like to just put it right in your bank account, don't
Yeah,
they?
they prefer direct deposits, and
Okay.
they want basically as many people as possible on direct deposits.
Okay.
Yeah.
Okay, so what if you owe taxes?
Now-
What?
Well,
What if you know taxes? Do you have to pay it all back at once? Like when they see you, do they need to have that check ready to go?
no, well, the deadline for income tax is April 30th. So after April 30th, Revenue Canada will start charging you interest. So if you pay a portion of that money before April 30th or by April 30th, then they'll just charge you interest on the balance of the money. If you decide to file your return after April 30th, then they'll be charging you a late filing penalty plus interest.
So if you think you owe money, definitely get it in on time for
Get
sure.
it in on time for sure.
Okay, what about if someone's in the situation where they're still paying their taxes from last year? They've been doing it maybe on a monthly installment. They're still paying for last year's taxes. How's that going to affect them this year?
Well, if you're getting a refund this year, but you owe money from the prior year, Revenue Canada will take your refund from this year and apply it to what you owe from last year to pay that bill off first. And then they'll either send you a bill for the difference if you still owe them money, or they'll send you a refund check.
They're gonna take their money before they give you any.
Definitely, yeah.
They always pay themselves first.
Yeah. Now, if you owe them money this year, it goes on top of what you owe them from last year, and then they'll charge you interest on the whole thing.
Oh boy. So get your taxes done. Okay. You run into people, I'm sure, who haven't done their taxes for a few years and they're a little bit nervous to come in. What's that going to cost them if they haven't filed for a few years?
Well, it depends. Of course, each year you file a tax, each year's return is gonna cost you, because we can't just lump them all together and file one tax return. You have to do each year separate. Now, if you owe them money, then they'll tack on penalties and interest. The penalty they charge you is 5% plus 1% per month. So if you're a year behind on your tax, they'll charge you a 17% penalty. That's on top of the interest that they're going to charge you. So that really adds up.
If you're 5 or 6 years behind and you
Yeah.
owe taxes, it
Then
might add up to a bit.
it's going to probably end up being double of what you actually owe them.
Oh, boy.
Yeah.
And if you're 5 or 6 years behind and they owe you money, will they give it all to you? Or will they hold some back?
No, if they owe you money, they'll pay you interest on your money.
Well, then file. Goodness, if they
Yeah.
if you think that they owe you
So
money,
you'll get your money, they'll pay you.
file.
Yeah, so they'll pay you interest on the money, but then there's always a note on the assessment saying that make sure this is income and you have to report it on your next year's income tax return. So this way they get to
Oh.
charge you, they charge you tax on the interest.
Oh, boy. Okay. There's so much to go over. We probably could be talking for days, but I know you've got to start doing some work on somebody's taxes probably. Anything in conclusion that you'd want to make sure that people take away?
Sure. In conclusion, like the tax system is very detailed, complex, and it's always changing. The Canadian Income Tax Act, sorry, is a book about 6 inches thick, and it's got over 3,200 pages in it. So it makes really good bedtime reading.
I bet it's exciting.
Yeah. So we prepared the returns for our members to the best of our abilities at a very reasonable discounted price. I've been doing this for the United Food and Commercial Workers Union for the last 34 years, and we must be doing something right as it's reflected by the thousands of members that are using our service. Most important thing to remember when you're doing your taxes is to be prepared. Like have all your papers together, have everything organized. So when you come in, we're concentrating on preparing the tax return and not just wasting our time searching for papers. Well, good luck with your tax season, and I hope you find this interesting.
So, some people watching are members. We have a member discount price. What do members charge for? What do we charge members for a very simple tax form?
Well, members are paying $25 for up to 5 information slips. And then their family members are paying $50 for up to 5 information slips. If it's up to 10 information slips, then we go up by $5. So we're charging $30 and $55 for.
Now, sometimes we have viewers watching who are not UFCW members. Are they able to use your services as well?
Well, we prefer like family members, and family members are charged $50 per return, which is a little bit more, but it's still a very, very cheap rate compared to what they're paying on the outside.
It certainly is. How can people get a hold of you, George, if they want to make an appointment?
They can phone us at the office. It's 204-786-5037. And just talk to our receptionist and book an appointment. It's very important that you book an appointment because
don't show up.
Yeah, and we get very busy during tax season.
Yeah, you can't just show up and expect to walk in. You need to make an appointment.
especially now with the COVID requirements and restrictions. Yeah.
And I'm guessing that if you're thinking like it's going to be me and my kids and my wife and her mother, you probably need to let people know that when you're booking the appointment that you've got a few people.
Yeah, yes, the receptionist will ask them how many people are coming in and what sort of returns they have. Like some have like a little more complicated investments in that. That way we allow a little bit more time. Like I like to follow schedule, and I don't want to leave people sitting, waiting out there too long.
No, we want to keep people moving through. Thank you so much for your time, George. I know that people get a little bit intimidated and there's like the feeling of you want to hide from taxes, but we have to do it. We have to face it, and you can hold people's hand the whole way through the process.
Thank you.
Thank you so much for being with us. And I want to thank everybody who joined us watching this as well. As we were saying, this is a tax benefit program for UFCW members. If your workplace is not unionized and you're interested in becoming a UFCW member, you can go to our website at ufcw832.com and learn all about how you can also get all these kind of benefits that we give our members. So thank you, George, and thank you everybody else for joining us tonight.
Thank you very much.